Thanks for joining us on the Page One podcast. I'm your host, Luke Peters, CEO of New Era Appliances. And before we get going here, I have a really important announcement. We need your help. If you're a vacation homeowner for a new cause that I'm working on, you can find out more at vetcation.org. And over there, we're supporting veterans with dream vacations. Right now, we need vacation homeowners who are willing to donate 1 week, and you can literally make a dream vacation for these veteran families that have served our country. Again, head over to vetcation.org to find more. In this episode of the Page One podcast, we're going to talk to Sean Belnick and how he successfully exited his business in 2017, which he started in 2001. It's a great story. And then he transitioned to a full-time board member in 2019. So we'll get to hear about that transition. He continues to remain one of the largest distributors of furniture to internet-enabled retailers and services tens of thousands of customers nationwide. And then Sean also recently founded SB Hillview Ventures, which is an investment arm to focus on startups and early-stage companies as an investor and advisor. Sean, welcome to the Page One podcast.
Thank you, Luke. Great to meet you. Great awesome. To be here as well.
Okay, cool. So you started so we got similar timeline, Sean, because I started New Era in 2001. So it's going to be kind of fun to talk through, how you found an investor and how that process went. And so for the audience, the theme is going to be built to sell, how to exit to PE. And Sean, why don't we start with talking about your business so everybody kind of has an idea of what Belnick Inc. Does, and we can start there.
Sure. So Belnick Inc., we are a distributor of office furniture primarily, but that's how we started. The company has since grown, and we distribute hospitality furniture, residential furniture, outdoor and patio, really almost anything you can sit in, and we've continued to expand into the home office category as well. So essentially what we do is we source great products at a superior value for our customers, and then we distribute them primarily through our website, bizchair.com, and also through Amazon and Walmart, Target, and a lot of the other larger mass market retailers online.
Great. And are these your own brands, or are you buying other brands and then reselling those?
For the most part, it's our own brand. We source product directly. That's part of our value proposition to our customers. We source directly from factories throughout the world and distribute it. So that's primarily what we do, but we do sell, some product on a dropship basis from other manufacturers.
Great. And so you're bringing in containers, and where's your distribution center set up at?
Yeah, so we've got Atlanta as our primary DC, and then we also have Ontario, California, as well as Olive Branch, Mississippi. And then we also use a 3PL to help augment our distribution network.
Wow. And is the majority of your product, does it have to go on pallet LTL, or can it go small parcel? Or I'm sure it depends on the size, but is there a way to kind of break that down either by dollars or quantity, how much goes either way?
Yeah, maybe just if you think of just trucks leaving the warehouse, it's probably 65% LTL, 35% small parcel. A lot of office chairs and smaller items come in boxes and are easier to ship, but a lot of our products in the banquet, hospitality, restaurant furniture space, you're shipping restaurant tables, or a church is buying 200 church chairs. A lot of those things will go on pallets LTL. So that was actually one thing that we did different earlier on. A lot of companies, still to this day, even Amazon, for example, really struggles with items that, don't fit in a box or can't, kind of non-conveyable items. So that's been something that we've really, excelled in, is handling, larger orders, offering freight discounts and finding ways to distribute those to our customers.
Yeah, for sure. The logistics of that isn't easy. That's why I was asking, because it looks like you have a number of distribution centers, which of course helps with the small parcel, but helps a lot with the LTL as well. Right now the rates are out of control, going from say East to West Coast. So you're kind of positioned around the country, and that's, got to help the cost structure on that end.
Yeah, absolutely. That was one of the things we did early on was, we were primarily shipping out of Atlanta. That's where we started. But opening up a West Coast DC really helped. And I think it actually gave us a competitive advantage because a lot of the companies we were competing with had West Coast distribution. and then charged premiums for their East Coast, shipments, just because container freights from Asia are typically more. And we kind of started off competing, from just the East Coast, and then we were able to go west, and have a lower cost basis on our end, but also keep pricing the same for our customers.
That's great. And now, how big of a company were you when you made that West Coast distribution center? Because sometimes it's definitely an added expense and more complex. And then, was it your team? Did you buy the building yourself? Did you lease a building? Did you have to hire your team? It sounds like it wasn't a 3PL.
Yeah, when we first started West Coast, we actually started out in Reno, Nevada first, and we signed a lease. I think it was in 2011, I believe, and it was the real estate agent showed us a graph, and we signed a lease at the lowest part possible, just kind of with the the recession and where the markets were. So we kind of got lucky from that perspective. It's just a really low cost basis, but it was our team, and we just hired a manager out there and got a warehouse. We didn't buy it, but we just leased it because the rates were so attractive, and we just bet on ourselves, and we knew long term it'd be good for the business, and we were seeing growth even as a lot of the economy was stagnant. So we took that leap, hired a team out there, and started off operations.
That's great. And then so give us an idea of how the company, how the top line sales were. So maybe in 5 or 6 year segments. So from 2001, and then in 2011, you opened up that DC. Do you remember about how big the company was at that point? And then, of course, if there's a few other segments kind of leading up to the sale, just so everybody listening can kind of understand, where the growth happened.
Yeah. So maybe looking through that, we started off, from zero, just like a lot of businesses. But I think it's important just to, say that, a business doesn't just start, with a lot of customers and sales, which seems kind of obvious, but it just can make it maybe seem daunting to some people. You go to a DC and you're just like, wow, how did this, 500,000 square foot DC get filled? That's shipping thousands of orders, but it really does start at zero, and just kind of having that perspective. So we started off purely drop shipping, maybe in 2001. I think roughly in 07, 08, we were probably at about 40 million in sales. And, I don't remember exactly in 2011, but we were probably in the low 100 million in sales, and we are at about 300 million in sales now.
Wow. It's incredible. You guys grew super fast to get to 40 in 07. And then sounds like you doubled it again in 4 or 5 years. And it's funny you say that, business starts at zero, which is obvious. Another way I'll think about it is it's a machine, and it takes a while to get that machine, running and spinning, but then once it's spinning, it's got a lot of momentum, and that's why, people see these businesses growing so fast, but it's like a lot of the hard work kind of came in at the beginning.
Yeah, I would absolutely agree with that. It's just, there's a lot of infrastructure in place, and we definitely had plateaus even through, 08 and 09. I think we were very thankful to have grown any, but I think we only grew about 3% that year, given the recession and everything. So even if it is a quote unquote rebuilding year and you're not as successful as you've been, it still gets you kind of set up for the next year or the next phase after that if you do the right things.
Yep. Okay, great. So let's talk about the sale process. So you sold in 2017. When did you start planning the sale? Was it a year earlier? How did that look?
Yeah, we had, looked at, selling, probably several years before that. And never, it's one of those things where there's never a right time to sell necessarily. It's always balancing, the value of the company now, where you see the company going in the future, who you're possibly selling to, what your role looks like, currently, near term and then longer term. And it's really, kind of a mixture of those. There's a lot of, intangible things related to that kind of make it just really tough. So we had, looked at possibly selling earlier on and, had some initial conversations with a banker, and it just didn't make sense at the time, given how fast our business was growing. And one of the things that made it hard for our business is it's a very capital intensive business. So we're, buying product from factories in Asia, and you're having to, plan months in advance and pay for product up front. and you're then selling it, a lot of times to wholesale customers who you're giving terms to. So there's a lot of working capital involved in the business. And the faster the business grows, you're having to buy more inventory, extend more terms, and it creates and consumes more working capital, which made it, a little difficult to, balance the fact that, our business was doing well and growing and, was successful profit-wise, but was also consuming a lot of cash, which made it, tricky from a investment perspective and what a lot of investors were looking for, and ultimately wasn't getting to a value that we felt was appropriate. So, we really, after having some initial conversations with some bankers, we kind of took a little time to, grow and scale the business. Because part of it too was, as the business is growing, we're opening up new warehouses, and anytime you open up a new warehouse, it's, like in Amazon, for example, a lot of the, people will say that, up until recently, they hadn't made money and they kept saying how they're investing. And it really does take time to, if you're opening up a warehouse, it's a big expense to, open it up, ramp it up, get people, get inventory, put racking in it, forklifts, IT infrastructure. It takes some time to grow into it. So pretty much we had just expanded into Olive Branch, Mississippi, just outside of Memphis. And we said, hey, this will last us for several years. Let's wait another couple of years, grow into our infrastructure we had built, execute on our plan a good bit. And also, look at working capital and maybe tighten things up a little bit just in terms of, as things kind of scale, you're able to forecast better on product, inventory sourcing, your customer distribution, and the scale just makes things easier to predict at the end of the day. So we used those lessons and learnings and then hired an investment banker, I think in mid-2015, to start the process.
That's a great summary. Now let's zero in on working cap. Now, why was working cap, and for everybody listening, everybody with inventory is going to understand that, or with ARs. But in general, why was that working cap a problem? And why was the expansion a problem when, you could have put those down as add backs? It would probably be pretty clear, hey, you invested in a new warehouse, that's going to hit your profit, but you could still show that on EBITDA with add backs. Or was it just that if you were growing fast and the working cap was growing during the process, you might get an offer at the beginning of the process, and by then you're kind of writing a check for your working cap at the end of the process? Or you talk a little bit more about that if you can.
Yeah, it was less an issue on like a net working capital adjustment, like a true up, with AR and AP and cash and receivables and inventory, where we were made whole effectively on the working capital. It was more, it was a big number, and I think our strategy and the way we had grown the business was, I guess it was less, here's a spreadsheet, we're going to go do analyses with our customers and try to figure out what we should bring in, and, a long drawn out process. It was more shoot from the hip. We're going to source product that we think is going to do well. And, that served us well 80% of the time, but it definitely, didn't work every time. So, on a net, we definitely won from moving faster and bringing in new product, but we definitely had, some losers along the way. And there definitely was some excess working capital that, a lot of people looked at the business and just said, at the end of the day, you're, and I'm paraphrasing here, but you're just a distributor of products. You're not, an e-commerce enabled company. So I think it was just the size and scale of the business, the amount of working capital required. And a lot of investors were looking more at, cash flow, and the business, wasn't necessarily cash flowing a ton because the working capital was eating up a lot of the business, which just made it challenging to get a value that we thought was, fair for the business. It's, I guess every business owner probably thinks their business is worth a lot more than everyone who wants to pay for it. Yep. It's kind of this dilemma you always have. But, when you're seeing, a pretty low, mid-digit multiple for this business that, we felt was growing and doing well and was fairly successful, it's just, why would we sell it today when we could hold on to it for 2, 3, or 4 years, and, over that time and the growth we're having, we would make what we would have sold effectively, the business. It was just kind of, it didn't make sense. And, everyone, no one necessarily believes the projections, but when, you see how well things are going, and you feel confident about your business and the business model, and, you know you're executing and doing the right things, it's kind of that hard decision where, you have to find the right time to sell that makes sense. And it's also valued appropriately.
No, that makes a lot of sense. And I'm guessing, part of it, just reading into it, as you guys get more sophisticated, your inventory turns go up, and that's how you can lean out that working cap, and you have less, aged inventory, those types of things. So that makes total sense. So talk about the process. So mid 2015, you guys exited in, I think, early 2017. Was it that long of a process, or, did you guys kind of get your books in order first and then go out to market? What were the bullet points on going out to market, and how did that look?
Yeah. So first we interviewed investment bankers and hired one, and that was kind of a process in itself. It was very difficult to, talk to a lot of very impressive people, but, we felt, definitely more of a fit with one of the bankers that we used. And, in retrospect, they did a, fantastic job with the deal and marketing it. And then, going to sell a business, it is not as easy as, creating a poster and sending out an email blast to a couple people. It's a very involved, drawn out process. And the investment banker, we felt, did a really good job, taking all the information, helping analyze our business, helping condense it into, they call it a SIM, a confidential information memorandum, which was, a pretty big task on its own. And then I'll probably be mixing up some of the timings, but I think it was in early 2016, I believe, there were some, distress in financial markets. And so we kind of took a pause, before going to market. I think it might have been the taper tantrum, when the Fed started to taper bonds or something. Yep. But I think the stock market dropped, 20% or something. And, there was a bit of uncertainty at the time. And I believe it was early 2016, actually. And so we kind of took a pause for several months, and kind of let financial markets stabilize a bit before, and luckily, performance for the business was continuing to improve. And we were, beating numbers, and, that kind of helped with inventory and working capital as well, just make things look better at the end of the day. As you get to that scale and size, and it can kind of grow as well. So we ended up taking a little pause there, but that also helped us, get all our ducks in order. And then, we went to market, and, the process kind of ran.
Great. And then during that process, how did it look like? Are you able to remember how many IOIs you ended up getting, and then LOIs?
I think we got maybe 6 or 7 IOIs. We got a good bit of interest. I believe we got the IOIs, and then from that IOI process, we had some management meetings with kind of a smaller group. I think we had 4 or 5 total. With some, the investors that were, kind of in the right ballpark. And, it really came to, I don't believe, actually, I think the one thing we did that was really unique, which was advice of our attorney, actually, was less negotiating an LOI. It was more going from an IOI directly into a lot of the purchase agreement terms. And so we had, with the investor ended up investing in us, we had kind of fast-tracked a process with them because they were very interested as well. And so we kind of fast-tracked, I guess we probably exposed ourselves a little bit, but also got some good buy-in from the investor in terms of, kind of skipping, using their IOI to create a purchase agreement and hash out some of those really big terms earlier on in the process.
Yeah. Oh, that's awesome.
If that makes sense.
Yeah, for sure. And that's great advice from the legal team, and obviously can take a lot of time and slow down a process, but you're kind of like, hey, let's make sure we kind of see eye to eye before we kind of go down the aisle. And so, yeah, that is pretty unique. So then, you chose the final group. Was there a particular reason that stood out? Obviously, I'm sure they had a good track record, but was there anything, beyond valuation that stood out on why you might have chosen them over the others?
Yeah, I mean, again, like value, you're selling your business, valuation is important, but it is not the critical thing. I mean, candidly, we didn't sell to the highest bidder. We sold to, a competitive bidder that we felt was a lot better strategic fit with us, and ended up, talking to some of their existing portfolio companies, spending a good bit of time, with the, to-be board of directors that was going to be created, with the investors on it, and just developing a level of comfort that, that these guys were, really, genuine, interested in the business, understood the business, had the same objectives that we had, and wanted to make sure that there was, alignment there, because, there's so many stories about where, private equity comes in or external capital comes in, and it, ruins the culture, the management team's out very quickly, all these stereotypical things you hear, about private equity. They're not all true. There are some really good private equity people out there. And, we felt that, talking to them and listening to them, and also talking to their existing portfolio companies, which had a lot of, the original management teams in place, even several years in, we just felt, a good level of comfort, their excitement around their business, the vision on how we were going to grow the business together. Everything aligned pretty well there.
And then during the process, so, you go exclusive in an LOI, usually 60 or 90 days. How was the process? Maybe what was the biggest hurdle? And, did you guys keep hitting your sales numbers? So did that make kind of that end of it, great? Anything you can share kind of during that select time?
Yeah, I remember the process taking a lot longer than I expected, and a lot longer than they expected, a lot longer than the bankers expected, a lot longer than the lawyers expected. There's just so many bits and pieces and components and moving things, and sales, and, almost every day is a new data point. And it's, I'd say the best thing for us, we had very strong performance from the time we put the business, on the market. We were, beating numbers throughout that, which just gave us, a confidence, to choose, the investor that we went with, and also make sure that we had, a bit of leverage as well. Because one of the things, I guess, that was also unique with our, we didn't have a signed LOI, so there wasn't, a true signed exclusivity period. And so we were, we kind of exposed ourselves, but they also exposed themselves a little bit too, to kind of have that alignment. So I'd say the biggest thing was, we were fair with our, budget and forecast, and not aggressive, but not conservative. It was a very fair forecast, and we were beating that pretty handedly, and got some really good momentum along the way, which, definitely helped us when some of the, and invariably there's going to be issues with inventory, just given how large the number was with us, and understanding the aging and, getting them comfortable with it. But, there was no change in material deal terms throughout the process. It was just a long and drawn out process because of all the legal complexity, having a lender involved, some of the stuff I didn't even appreciate the nuances. We did kind of a mini roadshow for some lenders that, I didn't even know we would have to do it. And it was more after we, signed, the purchase agreement, it was, okay, now we need to go get the financing. There were indications of financing, but there wasn't, it was kind of like a multi-step process to get there. And so it was just, I think just in general, when you're dealing with a larger transaction, there's a lot of moving pieces, and it takes time, and there's a lot of, lawyers, accountants, and everyone involved. And, we got there, but it definitely, I think we closed in February, and I think our initial closing date was supposed to be in, pre-Thanksgiving, so November. So,
oh, wow. That's a long one.
It definitely took some more time, but, it was again, like the holidays didn't help, the time of year, we were busy,
Yep.
everyone was busy, and, it definitely took longer than expected, but, we got the deal that was promised to us, and closed, and everyone was, happy with it. So.
And Sean, during that process, I mean, that's a lot of work and a lot of time. Who was kind of at your side? Who was the on the short list that kind of actually knew what was going on? I'm assuming everybody didn't know. And it would be just great to understand that part, just from an org chart perspective.
Yeah. So, we were doing tours throughout the, the office, and, people were there, and, the C-suite essentially knew, and then probably, a second level of management below that, was aware of it. But we had, like stock option equivalents for a lot of employees who were, very excited for the transaction, and also, being able to promise, new equity in the new company as an incentive. So we weren't really scared about that process and people finding out, but, we didn't tell everyone day one, but, as things got closer and the process kept moving and it got, more definitive, we started to share with more people that, that we were pursuing this, and, we got some really good buy-in, just given, the guys who bought us. It wasn't their first time either, and it was just a very good communications process and plan that we had going on.
Did you have it's really a data heavy thing. So was it mostly kind of a CFO job, or was it still kind of spread apart a few different functions at the company?
Our CFO definitely did a lot of the heavy lifting, just because it's a lot of reporting and data and analysis and understanding trends, by customer, by segment, dealing with a lot of the diligence, process, having consultants coming in and doing, marketing diligence, IT diligence. It was a real analysis on almost every aspect of the business. But, it was just, I was kind of managing the process, and we were trying to run the business as best as we could day to day. And, it was definitely a heavy lift. I don't think I had worked as hard as I did in that period, just because, at the end of the day, you still have to run the business. And if you're not running the business, then, the sale's not going to go through, but you also have to kind of shepherd the sales process along, which was very helpful with the, the investment bankers helped a lot with that, obviously, just to kind of keep things moving, keep good momentum, and also, take some of the, the heavy lift away from that perspective, so we could focus more on the business, but also, continue to keep the process going as well.
Yep. And post close, so, you guys finally got through it, and I'm sure you guys had a nice celebration. Then post close, what was the biggest thing where the PE group helped out? What, maybe it was a surprise, or maybe they found something out about the business that you didn't think about strategically. What comes to mind there?
I think, maybe it wasn't a total surprise, but I think we had grown the business to a fairly large scale with a very lean, middle and upper management. Team was very, I guess, like there weren't a lot of people at the top. And so they, early on brought on, a COO to really help, kind of look at things from a different perspective, add more, horsepower, bench strength to the top, and really start to think through things. With just a different perspective and a different understanding. And, it's one of those things where, like, a lot of the data and things they're asking for, it's not just to give you work, it's the, you looking into those things and getting reports and things that they're asking for, is so you can also see as well and see the things that they think is important. But a lot of just understanding, like, I guess the way they're looking at it is more, how can they create long-term equity value versus, I probably looked at it. I mean, I know I looked at it as, how can I make more profit?
Yep,
and,
exactly.
That's those are very different things, in the sense that, you can create more profitability, but if it's, if it's very working capital intensive, for example, that may not necessarily be the best thing. So thinking through, helping with some, they did a great job helping with, consultants and people you can, like, recruiters to bring on new, management and talent, and really build out a great team for we call it the kind of the 2.0 phase of the company, which feels like it's on a really good trajectory. So it's just one of those things where you can do something, maybe you make a little bit less money, but it's a lot more capital. You get a lot more leverage off the existing capital base. So a lot less money in the business, and that's more valuable for a long-term equity perspective versus getting every last dollar, for dollars cents. That you're still making the money, but it's taking time and energy to do that.
Yep. And looking at your bio, you kind of quickly were able to step aside. So exit early 2017, transition to full-time board member 2019. Walk us through that. That's interesting. You must have found another CEO. How did those conversations go, and kind of what was your mindset there?
Yeah. So, when I did the transaction, it was a 2-year employment agreement, and my intent was always to fulfill that 2-year agreement, and then kind of decide what I thought would be best for me in terms of my interests and things I was looking to do. And one of the gentlemen who came on as the COO very naturally looked as a top contender as the CEO, and a very natural transition. So it made that process a lot easier. And as we started to build out more of the team, I personally felt it had been a really good run, and I was seeing the caliber of people that we were bringing on, and it felt like there was a really good way to bring on a new team that would really help propel this business from where it was to where it's going now. And it's a different set of skills, a different set of challenges. So I didn't intend to leave after 2 years, but I didn't intend to stay either. I just stayed very open-minded with it. And, as time went on, it just became, for me, I looked at my interest in, kind of smaller businesses, startups, more entrepreneurial things, which were, a little more engaging than, large scale businesses with very different challenges, that I was looking to tackle. So that was the decision I had made after, I probably made it about 18 months in, that I was, planning to transition out.
Yep. And, when all's said and done, I mean, you started this business with nothing, 2001. And then you just mentioned, in 2021, it's $300 million business. I mean, that's a massive business. Very few people make it that big, that large of a business, and also that attractive of a business that's going to be bought by private equity. Going through this process, what is the best piece of advice that you could give a business owner? What's something that kind of stands out to you? Maybe something you wish you knew ahead of time that you can kind of pass on.
Yeah, it's such a hard question because it's, every situation is different. But anytime anyone asks for business advice, I always try to think that a lot of businesses are successful not necessarily because it's, the best idea or it's super complex. You can be really successful just, working hard, having a really good business, solving your customers' problems, and taking care of your customers. And it's not necessarily that you have to reinvent the wheel every time or come up with some, crazy new, I don't know. I mean, you think of like Apple and the iPhone, right? They do a really good job with their iPhone. It's been around 12 years now, and they just keep, putting the customer first, doing the best job that they can, and they've stayed a market leader. So I just try to tell people that, it can be a very long journey. You can have a lot of challenges and bumps along the road, but stay true to yourself, stay true to the business. In the end, hard work and putting your customers first and, not cutting corners goes a long way. And it may seem kind of trite to say that, but also, it isn't, making short-term decisions at the detriment of, your long-term success. That's not going to help. It's really, I advise to just, keep focused on that North Star, and, you'll have bumps along the way, right? We dealt with tariffs along the way, from China. And, it was a very rocky, tough time, but we got through it, and, the business is, operating really well now, kind of post-tariff digestion period. And it was, it makes you really question, yourself sometimes along the way when there's adversity, and it's remaining, true to yourself, true to the business, true to what you're good at, and, not straying away from that.
Yeah, that's great advice. And also so interesting because, a lot of people say, well, what's so special about your business? I'm sure a lot of owners have heard that, and I'm sure you did too. And it's like, well, look, a lot of brands didn't invent something that was totally new. They just did it a lot better. Okay. And you can just go on and on and on through so many brands. And a lot of it is, that they kind of create these different modes with marketing and logistics and sales and you put them all together and hey, that they built a brand, but it still is a very similar product than what somebody else might have. I mean, Coke is still, similar to RC Cola, but their distribution center and their sales. And it's like, it's not just because the drink tastes better. And you could say that about so many different, food categories and so many different businesses. So I'm glad you brought that up because I think a lot of young entrepreneurs do get stuck on it. Like, oh man, I can't do it because I don't have a great idea. Well, neither did 99% of other people who started a business. So don't let that start you or stop you.
That's so true. It really, again, if a lot of times too, the person who invents the idea isn't necessarily the one who monetizes it the best way. It's whoever can take that idea and figure out the best way to practically apply to things and operate a business. And I think, inventing ideas and being inventive is very different from even being an entrepreneur and running a business and being your own business leader. Those are, different skill sets for different people. And I think it's rare where, the ideator is the same, the same person who is operating as well or doing that successfully to large scale. A lot of times you'll see founders almost step aside and an operator comes in to operate and, they may stay as the idea person as well. So I think it's just getting comfortable with those skill sets and, leaning in on what you're good at and, hiring people for what you're not.
Yeah. Well, it's a great story, Sean, and congrats on that. I mean, very few people get to 300 million in top line sales and get acquired. So hats off, and really appreciate you sharing this with the audience. Before we let you go though, tell us kind of what you're up to right now. You founded SB Hillview Ventures, an investment arm. What are you doing there?
Yeah. So that's kind of been more of my, passion project recently. It's just, finding, entrepreneurs and, small business owners who have, great ideas and just, helping lean in, advise, invest, and try to find ways that, I can be helpful, to, small business owners or people with great ideas or, people running kind of a smaller company and looking to grow it and scale into something larger. And so from that perspective, I, look at a lot of ideas, but, invest in a handful and also, mentor and advise and, try to help, others, get on a good path that, I've been very fortunate to go through. And it's kind of, part hobby, part way to give back, but also, part fun and excitement as well.
Yeah, it does sound like a ton of fun. We'll bring you back in the future for round 2 on that when you get some exits on that venture. That does sound like a lot of fun. Well, why don't we finish up? Just tell listeners how they can get a hold of you.
Sure. Yeah. I mean, my email is just sbelnick@gmail.com. I'm pretty accessible and, I'm on LinkedIn, Sean Belnick. I used to have a website. I don't think it works anymore. It's been a while since I had that, but, I'm around.
Awesome. Okay. Well, listen, thanks again, Sean, for joining us on the Page One podcast. Hope everybody listening enjoyed the interview today. Truly appreciate your reviews on iTunes and hope you join us all on the next interview. And before I let everybody go, just remember, head over to vacation.org if you're a vacation homeowner and if you're really interested in helping us in that cause of helping service men and women. All right, everybody have a great day.